In this presentation, we will record transactions related to craft sales and commission revenue for our not-for-profit organization. In other words, we're going to have craft sales basically on consignment, where artists will provide the not-for-profit, the crafts, who will help facilitate sales of those crafts, provide the painter or the provider of the crafts with the revenue while keeping a small commission on the sales process for the process of the sales transactions. We will do this within QuickBooks Pro, QuickBooks Desktop. Here we are in our QuickBooks file. We currently have the open windows open. You can open the open windows by going to the view drop down up top and selecting the open windows list. We're now going to go to our trusty trial balance, our favorite report that we're going to be working with here. We're going to go to the reports drop down to do so. We're going to go to the accounting and taxes tab. Then we're going to go to the trial balance. Within the trial balance, we're going to change the date range to the range we will be working in, which is 01/01/20 to 12/31/20, January through December 2020. I'm going to increase the size of the font by going up to the customized reports up top. We're going to go to the fonts and numbers. We're going to make the font size a little bit larger. Again, you don't have to do this. I'm doing this on my side. It might be, your font might be just fine the way it is, but we're going to say yes and okay, and then we have a slightly larger font that we can now be working with. Now let's go look at Excel and see what it is our objective will be. So we're here in Excel checking out our objective. We're going to say here that we're going to have sales of crafts. So you can imagine our scenario. One of the items that we have as our programs is going to be the exhibition. Within the exhibition, we're going to sell the crafts for people who are going to be craftsmen and women that will give us the crafts. We then sell them. We're going to collect the revenue and help the transaction process, and then provide the craftsmen and women with that revenue, holding on to a commission for our service to facilitate the transaction. Basically, kind of a consignment type of transaction that we will have here. So how do we need to set this up then? We're going to be getting cash, so we have to get the cash. The cash is going to be coming from the public who have been going to our crafts fair where we displayed the crafts that are not ours but are the artist's crafts. Then we're going to be keeping of that cash only a portion of it, which will be 20%. So of the cash we get, we're going to keep 20% of it as part of the facilitating of the services to provide the forum to show the crafts and to provide the transaction here and to collect payment and whatnot. And then the difference then has to be going to a liability because we have to pay it. We owe that money to the craftsmen and women who actually provided the crafts. So whatever we collect, we will then provide to them. So increase to cash then, increase to revenue, and then increase to a liability. The liability that we owe, we got the money, but we don't get to keep it. We have to pay it back out. So what does that look like from a journal entry standpoint? There's three accounts happening here, a little bit different, a little bit more complex than we have seen in the past. You can also set up and think about different types of system. If we had multiple sales that we made of crafts that were provided by others, how would we set them up in terms of us collecting the revenue and recording the revenue on them? So it might just, this is one transaction that could reflect multiple transactions of a similar kind as we sell the merchandise and the crafts. All right, so we're going to go to cash up top. Cash, of course, will be increasing because we're selling the crafts. So we're collecting all the cash, our portion and the craftsmen and women's portion that we're going to have to pay out to them. Then we're going to increase the commission. The commission being the 20% of it we actually get to keep. This is actually revenue to us. So we're going to say we're going to keep that. This is what keeps us in business. This is what allows us to provide the service here. So we're going to say we have the commission, and we will set that up as commission revenue, which is, where is that? Right here. Another revenue type of account, it's going up. And then the amount that we have to pay to the craftsmen, which is 80%, we keep 20 of the 12,230. We have to pay 80. So then that 80% is a payable up in the orange accounts up here that we're going to have to pay back out to the craftsmen. So that then would be increasing the payable, like so, and that's a liability account. So revenue is going to go up, but only about by the amount that we get to keep, basically our commission. The liability is going to go up, and the cash is going to go up. We want to be able to record that in QuickBooks, and we also can break this out into the category, since this is going to be crafts as part of our exhibition type of project. Again, our major goal with the classes is to break out the expenses. That's what we are required to do. But if we can break out the revenue in a relevant fashion to give us more information, we will do that, of course, as well. I mean, we might as well. So we're going to go back into QuickBooks. We're going to go into the home page. How can we record this? We're going to say, once again, sales receipt. Let's go to the sales receipt. We've set it up as the donation. You could change the name or whatnot if you would like to, and create a different template if it would be useful for you. In this case being the craft sales, right? So it's going to be a craft sales type of transaction. Now I'm going to set this up on one form here. You can imagine a kind of different systems that you might set this up as, but if you're imagining here that you're making a sale at the crafts convention, or you're selling the crafts at the place where you're going to sell them, and it's not ours, we're selling it on consignment, we could set up a form such as this, and this form can once again be used to provide to the people that are purchasing as a kind of sales receipt, because this would be more like a type of sales receipt. And so we're going to call this customer and one. And again, you can imagine this with multiple different transactions, which would be of a similar type. We're going to put this into the class of the exhibition, because it's going to be of our exhibition class. That's going to be one of our programs that we have. This is going to be on the 6th. I'm going to make the date, and then we're going to have to set up the item. So we're going to need an item that's going to be driving to these two accounts. Now this is where it gets a little bit tricky. You could try to think of different systems to do this in different ways. I'm going to make one transaction that's going to be posting both sides of it. So we got to say, all right, the sales price, we're imagining for this transaction, $12,230. We're going to apply out some of it to the revenue account, which would be 20%, and some of it to the payable account. To do that, we're going to have to set up two items in our QuickBooks system. So we're going to say craft sales, and then I'm going to say 80% to the craftsman, something like that, and that'll give us an indication of the item that is included in it. So I'm going to say tab, we're going to set it up and say save, and then I'm going to get that 80%. And notice that we're setting this up as an income type of account, which is wrong. It should be a liability type of account. I'm going to keep it at the income type of account here, show you what will happen on the income statement, and if you make that error, which we're totally doing on purpose here, then you can go back into it and fix it. Say save and put it down here. And we could put something a little shorter. We may not want to include the 80% up here and put it down here in the description or something like that. I'm not going to put a rate. We're going to have to create another account. So the account's going to be craftsman payable. It's going to be, let's copy the same account over here. Payable to craftsman. All right, so we'll put that here. Tab, setting that up. So there we have it. We're going to put it in the description, setting it up here, and save and close. So there we have that. We're going to say OK, and there we have it. So then we'll tab through this, and this is going to be the 80%. So you could think of it, if the sale was $12,230, you're going to take the $12,230 times 0.8, and you can calculate it right there, 80% of it. And then we need another one that's going to be the craft sales 20%. That's going to go for us, right? For the revenue. Craft sales 20%, and we go to the non-profit, which is going to be us, right? That's the amount we're going to keep. So I'm going to say save. We're going to set up an item for that. 20% go into the non-profit, and we're going to have to set up another account here because we don't have an income account set up for it. So we're going to call this, and what did we call it over here? Let's pick up the same name. We call it commission revenue. So we'll put it to commission revenue. Let's pick up the same name. So it's like kind of our sales commission, and we'll say save. Okay, set that up. Commission revenue, it looks good. And okay. And that's going to be the 20%. So we had the 12,230 is the total, 12230 times 0.2. And that totals out to the 12,230. So if we think about what's going to happen with this transaction, we know that the undeposited funds, we're imagining the amount we received was the 12,230. I mean, that's going to be undeposited funds going up. Then we're going to be driven by the other side going to these items. The first items going to the craftsman is going to go actually to a payable account. not to an income account. The second one will be going to an income account as we set it up, pointing to the income commission. Let's check it out, see what happens. Save and close, we're going to say yes. Then we're going to go to the trial balance. Within the trial balance, we're going to scroll down and say, well, let's go up first and say, there's the undeposited funds. So there's that one, and closing that back out. Then we had the other side go into a payable account. So the payable account goes to a liability type of account, which is not set up correctly. So notice I put it down here as an income account, and that's wrong. It should be a payable account. So how can we fix that? Totally did that on purpose. So we could fix that. I need to reassign the name of this account to a liability account. So I'm going to do that by going to the lists up top. We're going to go to the chart of accounts. And then we're going to say that we're going to set this. And if we go all the way to the bottom, you'll note that we have the account types here is going to be how it's usually ordered. We have the payable to craftsmen. I want to change that from an income type of account to a liability, other current liability. I'm going to do that by right-clicking on this. We are then going to edit the account. So we'll edit it, right-click edit. Then we need to change the account up top, not an income type of account, but other current liability type of account. So we're going to say other current liability type of account, please. And that looks good. And then we're going to say save and close. And there it is, other current liability type of account for the payable, moved up on the account types. Very nice. Let's see if it does so on the trial balance, which I'm fairly confident it's going to do. It's going to be okay. So if we go back to the trial balance, then we see in the payables, there it is, the craftsman payable of the 9784. So we have the undeposited funds, the craftsman payable, then we have the commission revenue. Here's the commission revenue, double clicking on that item. We can then see our sales receipt, double clicking on that. There it is. Closing this back out, closing this back out. Now we're going to make the deposit, moving it from the undeposited funds up to the checking account. Go into the home tab. We then see the number 1 right here again, as we've seen multiple times in the past. Remember that when you make the deposit, you want to make it in the same type of format that it will be shown on the bank statement, so you can match the bank statement to your records on the bank reconciliation. Checking that off, we're going to say OK. We'll keep the date on the 6th. Then we'll say save and close. Save and close. We'll actually click save and close as we say it too. Save and close, click. And then we're going to go back to the trial balance, and we'll note that the undeposited funds has gone down. Checking account now increasing. Checking account now increasing. There is our deposit. Looks good. Closing this back out, let's take a look at our other report that we're really focusing in on here. That's going to be the profit and loss. The profit and loss by class. Profit and loss by class report. If we select that item, then change the date up top, 01/01/20 to 12/31/20, January through December 2020. Then we have our information. We only have the revenue side so far. We put this one into the grouping of the unrestricted and unrestricted for the program, which was exhibition. There we go. It's kind of stolen there because I didn't know what I was doing, but there it is. Exhibition for the program. And then, of course, if we wanted to minimize this and get just basically our 2-column type of thing, which there's only one because we don't have any restricted items, we could do that, and that'll give us our nice short restricted item. We can then expand and we get the more detail. Now, again, this more detail is really reserved. What we need to do for it is on the expense side. So as we move forward to the expense side, this column is going to be really important because that's something we need to be able to break out between, and we'll do so in part with percentages. These percentages, breaking them out between the programs, the admin, and the fundraising.